The Rebel Capitalist Show. First of all, what is your long-term view on the dollar? I'm assuming it's down, but I don't want to put words in your mouth. And then how would you juxtapose that position to Brent Johnson and all of the fantastic things that he brings up when you look at the debt, the dollar-denominated debt outside of the United States?
So Brent's a friend of mine, and I have a ton of respect for him, but we just disagree on the dollar. He's also another person who thinks stock prices go way higher over the next few years, and I disagree with that too. I do think that for me, my investment framework comes down to 3 or 4 things. It's really fundamentals, sentiment, and technicals. And there's also macro you can throw in there too. Todd Harrison has called these the 4 pillars of investing or trading. So for me, what's the fundamentals for the dollar? Fundamentals are it's pretty significantly overvalued against almost any other currency on the planet. Take your pick: euro, yen, Chinese yuan. These things are all dramatically undervalued relative to the dollar. Whether you look at something like the Big Mac index or any type of purchasing power parity, dollar is overvalued, significantly overvalued. But the other major fundamental for the dollar is the U.S. fiscal situation. So you look at the direction of the dollar of the last 25 years, and it's very highly correlated to the fiscal deficit relative to GDP. So when last time we had a surplus was in the late 90s, early 2000s. That was when the dollar hit a major peak. When the dot-com bust happened, there was a big hole in tax revenues, and the deficit blew out, and the dollar rolled over into a major bear market that didn't end until 2009, 10-ish. When the deficit was blowing out as a part of the financial crisis. So the deficit over the last couple of years went over $1 trillion. And it's the first time since 1968 that we've had a significant fiscal deficit in the middle of an economic expansion, or at least during an economic expansion.
It's the greatest economy of all time, Jesse. Right. Don't you know that?
Exactly. So, but in 68, it was because of the Vietnam War and other things that Nixon, was doing. And we only had a deficit of 2.5% of GDP. We hit 5% last year. And so this is twice as big as the Nixon precedent. What happened after 68? Well, there was the other things going on, but that fiscal profligacy ended up in rampant inflation for the next 10 plus years. I think we saw this blowout in the deficit over the last couple of years, and now it's, making the last couple of years look like, nothing. This $1 trillion deficit is turning into a $3 trillion deficit. We're going to hit 18 or 20% of GDP on the deficit, something that we haven't seen since, World War II. So to me, this is a very, very bearish fundamental for the dollar. It couldn't be more bearish. And if the dollar does follow the deficit as a major fundamental, the dollar's on the verge of another major bear market. And that's why I said I think a 40% decline over the next 3 to 5 years is not at all out of the question. We can get into sentiment and technicals too, but to me the fundamentals are the primary thing to watch for long term.
Okay, so the bottom line is we've got a lot of cross currents with anything, especially in macro. So you understand Brent's position and the fundamentals he's talking about with this dollar-denominated debt outside the United States, but you just think the deficits, they're going to have to print so much money, they're going to peg the yield curve, that's just going to have more power than the other cross current of the dollar-denominated debt.
Yeah, I think the big thing for me is, there's this idea that I've heard Brent talk about and some others, is that this essentially represents a huge short position on the dollar. This overseas debt that has to be covered, paid back. They need dollars to pay it back. The one distinction I would make between a short position and debt is that a short position has to be bought back. Your broker will buy you in at some point if you run out of money. Debt doesn't have to be paid back. Debts, a lot of times don't get paid back. And so I think that's probably what will happen with a lot of this is that, those debts just won't get paid back. Those people who are, owing money in dollars are just not going to ever buy those dollars back. So it's not technically a short position in my view, and I think that's the flaw of that argument.
I know what your take on the dollar is. I'm going to assume that you're bullish gold, but I don't want to put words in your mouth. So what do you think about precious metals, commodities, and Bitcoin?
Very bullish on gold longer term. In the short run, I think gold's probably due for a correction. Real interest rates are rising now, which is not a good environment for gold. But I do think longer term it could go much, much higher. Bitcoin, the problem I have with Bitcoin is I agree with the crypto nerds, whatever you want to call them, in every respect, except that crypto is a store of value. I do not believe crypto is a legitimate store of value. I think gold is much better in that respect, and really the only proven store of value in an environment like this. So bullish gold longer term, kind of cautious short term, and not, no comment on Bitcoin.
What do you think of commodities? Oil, uranium, do you have a view on those?
Yeah, I mean, if the dollar tanks and we start seeing an inflationary environment, this ratio, commodities have never been so cheap relative to financial assets as they are today. I mean, commodities, so if we're entering an environment over the next 10 years that's bad for financial assets, it's got to be relatively good for commodities. And I am bullish on oil. I was buying, like I said, there was a lot of insider buying in March and a lot of the energy names. I do think that will be a good investment over the longer term. As for, a lot of the other commodities, to me, gold and oil are probably my two favorites, the ones I'm most comfortable with. But I probably think that the rising tide floats all boats over the next 10 years.